Hello, Assalamu alaikum students. This is your teacher Azka, and today I'm going to solve this paper. This is paper 1 for O levels and IGCSE accounting. Paper 1 variant 2, and this is latest paper uh, May June 2024. Okay, so today we are going to solve this paper. So I am just going to start this paper from the very end of this paper. Okay. Okay. So the first question is question number 35, basically. So question number 35, that which statement correctly describes the principle of realization? Okay. So we know that principles of realization is basically which states that profit is recognized at the point when goods or services are delivered and control or ownership is transferred to the consumer. So according to this, now let's read the answers, read the choices. So the first one is that profit is earned when a check is received from a customer is payment for goods supplied. So it is not suitable and it is not aligning with the definition of realization concept. So A is not the right answer. Profit is earned when a check received from a customer is paid into the business bank account. So as I said, that the definition of principle of realization is that when the profit is recognized at the point when goods or services are delivered and control or ownership is transferred to the customer. So in that case, we will be recording the sales. So in C part, profit is earned when the goods are supplied and ownership possessed to the customer. Okay, so C option seems to be the right option. But now let's read the D part also. So profit is earned when the customer places an order of the for the goods. No, we cannot realize the sales at that time whenever the customer is placing the order. Whenever we supplied the good and we transfer the ownership to the customer, so only in that case we will like consider that we have earned the profit and we have made the sale. So C is the right option because profit is earned when the goods are supplied and ownership possessed to the customer. So C option is the right option. Question number 34. Rolf wants to compare the accounting ratios for his business with the accounting ratios for his brother's business. So what would prevent Ralph to making from making a meaningful comparison? Okay, so basically there are different accounting policies can significantly affect the calculation of accounting ratios, making comparisons between the two businesses less meaningful. For example, if one business using the straight line depreciation and the other maybe uses the reducing balance method depreciation, so their profit and assets values uh, will differ impacting ratios like return on assets or maybe profit margins. So it means that it depends that which type of accounting policies businesses are using. So D option seems to be the right option. Okay, so the next question is that Marinda gross margin fell from 25% to year one and year one to 15% in year two. So what may have caused this? Okay, so basically whenever there is a reduction in selling prices without a corresponding decrease in cost of goods sold, so it would lead to a lower gross margin. So this would explain that why her gross margin fell from 25% in year one to 15% in year two. So now let's read the options. So the first option is that Miranda paid less for her purchase in year two. So if maybe you just remember that what is the trading account trading section of income statement looks like. So first of all, we have the revenue. After it, we have to deduct the cost of sales, and at the end we will be having the GP. So if GP is fell from 25 to 15, so it means that something happened. Maybe cost of sales increases and revenue decreases, or maybe if the revenue is increasing but the cost of sales is also increasing, something like that. So it means that your GP margin would be declining. So that's why there should be a corresponding decrease in the cost of goods sold with the revenue. So the P part is that Mirinda purchased fewer goods in year two. So if Mirinda is purchasing fewer goods in year two, but there is no information related to revenue, so if the cost of sales are increasing, because we know that when the cost of sales are increasing, if the purchases are increasing, if the opening inventory is increasing, and if maybe the closing inventory is decreasing. So in that case, your cost of sales would increase. Okay, so whatever the things we are adding into the cost of sale, it is increasing the cost of sale, and whatever the things we are decreasing or we are subtracting from the cost of sale, it would cause a reduction in cost of sales if the amount is very high in terms of closing inventory. So if Marinda purchased fewer goods in year two, so it is not, because if the fewer goods purchased, so it means that there is also a reduction in revenue. Because if the fewer goods purchased in year two, so it means that there is reduction in the revenue also there. So it means that if the cost of sales is decreasing, so revenue is also decreasing. So the if the revenue there should be a corresponding decrease. Okay, so it means that this is not the right answer. So the C part is that Mirinda reduced her selling price in year two. So it's look like the right answer, because if the selling prices are decreasing, so it means that revenue would decrease, and the cost of say, and because of this, the GP margin is decreasing. So C part is the right part. Okay. So after that, okay, so we have question number 32, that Abhinav provided the following information. Um, First of all, let's read the requirement. So what was the rate of inventory turnover for the year ended 31st December 2020? Okay, so basically we need to find out the average inventory turnover rate. So what is the formula for we can use for this? So inventory turnover ratio formula is inventory turnover ratio. Inventory turnover ratio is equal to cost of sales divided by average inventory. Okay, so first of all, um, we need to find out, if you see that we have the cost of sales. Since we are going to find out the inventory turnover rate for the 31st December 2020, so as you can see that we have the cost of sales for year end 31st December 2020. So what we have to do is we need to find out the average inventory. So there is a formula for average inventory, and the formula is opening inventory plus ending inventory, opening plus closing inventory divided by 2. So if you see that since we are going to find out the rate of inventory turnover for 31st December 2020, so as you can see that for 31st December 2020, we had a closing inventory which is 8,000. And what would be its year start? Year start would be the 31st December 2019. So this is the opening inventory, 4,000 plus 8,000. So 4,000 plus 8,000. So this would give you the answer, which is 12,000 divided by 2. So this is 6,000. So 6,000 is the average inventory. So what is the cost of sale? Cost of sale was 120,000 divided by 6,000. So we have the answer, which is 20 times. So it means that B option is the right option. Okay. So after that, we have question number 31. Okay, so question number 31. Mayim does not maintain a full set of accounting records, only the purchases for the year and assets and liabilities values at the end are known. Okay. Which financial statements can be prepared using the information? Okay. So we know that for finding out the income statement, purchases are not required only. There are other things we need to we need to find out the profit, or we need to make the income statement. So it means that with only purchase we cannot prepare income statement. Okay, so it means that we cannot prepare income statement. C and D part can be right, C or D part in term of income statement. And since we have the information related assets and liabilities, so we know that statement of affair is just like the statement of financial position. Just the terminology has been changed because this is incomplete records account. So statement of affairs, we know that statement of financial position consists on assets and liability. So if we have the information related to asset and liability, so we can find out the capital and we can balance our statement of affairs. So that's why if we have the answers for assets and liability, if we have the information related to assets and liability, so it means that we can prepare the statement of affairs. So it means that we can prepare the statement of affairs. So C part or and A part is seems to be right, but since we need to see that our both options should be right in term of income statement and a relation with the statement of affairs. So it means C option is the right option. Okay. So the next question is, okay. So question number 30. Okay. So we have the question number 30. So Roshan's sales for his first year of trading were $55,000. His gross profit margin was 20%. The closing inventory was 3,200. So what was the purchases for the year? Okay. So to find the purchases, first of all, since as we have the information related GP, okay. So we have the information related to sales, we have the information related to GP, and we have the closing inventory, and we need to find out the purchases. So since the gross profit margin is 20%, so we can find out the gross profit. So how we can find out the gross profit? So there is a formula we can find out through GP is equal to sales multiply GP margin. So the sales was 55,000. Okay. So 55,000 was the sales. Multiply 20% was the GP margin, 0.20. So we have 11,000, which is GP. So now we can calculate the cost of sales. So through cost of sales, we can find out the purchases. So cost of sales is equal to sales minus GP. And sales was 55,000 minus 11,000 was GP. So we have 44,000, which is cost of sales. So now we can find out the purchases through the cost of sales. So cost of sales is equal to opening inventory plus purchases minus closing inventory. So since we don't have information and opening inventory, so we will assume that it was $0. So typically for the first year of trading. So we have the information related to cost of sales. So cost of sales will equal to 44,000 is equal to opening inventory. We don't know. So 0 plus purchases we don't know. Minus closing inventory, we have the information related to closing inventory, which is 3,200. So now we are going to rearrange to solve the purchases. So purchases would be here. We can make the purchases subject 44,000 plus. So this would plus with the 3,200. So 3,200 and this is equal to 47200. So these are the purchases. So it means that D option is the right option. Okay. So now let's see the other question. Okay. So Sam's work in progress was especially $500 at the start of the year and 11,200 at the end of the year. So when Sam prepared his manufacturing account, he forgot to make the adjustment for work in progress. So how did this omission affect the cost of production and the gross profit? So okay. So if we talk about the cost of production, so cost of production, if Sam forgot to adjust for work in progress, so he did not account for the increase in work in progress from 6,500 to 11,200. So this omission means that he effectively included the additional 4,700 in cost that should have been excluded, resulting in an overstated cost of production. So it means that your cost of production would be overstated. And if we talk about the gross profit, so since the cost of production is overstated, so the overall cost of goods sold is also higher than it should be. So a higher cost of goods sold leads to a lower gross profit, or you can say that understated gross profit. So your gross profit would be understated. So B option is the right option basically. Okay. So now let's see the other question. Question number 28. Okay. So manufacturing company provided the following information. So we have this information. What was the prime cost for of manufacturing? So what is prime cost? Prime cost is basically the direct cost. So let's see that what is the direct cost. So cost of raw material is the direct cost because we can easily attribute this cost and we can easily divide it by the number of units. Direct wages is also the direct cost. So machinery depreciation is the indirect cost. Factory support sale is also the indirect cost. Factory rent is also the indirect cost. Machine repair is also the indirect cost. So we have only two types of direct cost, which is direct wages and cost of raw material. So now we are going to add this. So 186,000 plus 75,000. Okay, so we have 261,000. So B option is the right option. Okay. So now we are going to see the question number 27. Okay. So in question number 27, which statement about the accumulated fund of a society are correct? Okay. So the first one is um that a surplus will increase the accumulated fund and deficit will reduce it. So this is correct because the accumulated fund represents the net assets of the society. So a surplus excess of income over expenditure will increase it and deficit will reduce it. So A option is first is the right option. Number two is that it includes all monies received and paid during the year. So this is incorrect because accumulated fund does not include all monies received and paid during the year. It only reflects the net assets or accumulated surplus for of society. So two is not the right. Now let's see this three. That members cannot make the drawings from the accumulated fund. So this is correct. So accumulated fund belongs to the society as a whole, not to the individual members. So they cannot make personal drawings from it. So this is right. And the fourth one is that accumulated fund is shown as an asset in the statement of financial position. So this is incorrect because the accumulated fund is shown as the part of equity or fund balance in the statement of financial position, not as an asset. So the correct statement would be 1 and 3. So B option is the right option. Okay. So now we have the next question. Okay, so question number 26 that a club receives subscriptions from members totaling 12,600. Okay, so this is which we received. Year ended 30 April 2019 and the following information was available. Which amount appeared in the income and expenditure account for the subscription for the year ended 30 April 2019? So we have this information. So if you see that we have the information which is subscription in arrears and this is 1100 at 30 April 2019. So since this is the prepaid and this is belongs to the previous year, that's why we have to deduct this. Okay, and if you see that 1300 which is subscription paid in advance in 2018, so it belongs to the next year, but since it's paid, so that's why we are going to add it. And if you see the arrears in 2018, 13 April, so since it's belong to the current year, that's why we need to add it. Sorry, we need to subtract it. Since it belongs to current year but not paid yet because this is in arrears. That's why. So 12,600 minus 1100 plus 1300 plus 800 minus 800. Okay, so I think this method is more easy for you if you know that how to prepare the subscription account. Okay. So this is our subscription account basically. So if we can, if maybe you know that whenever we need to make the income account, so we use a mnemonic which is APA, APPA. So if at the year start, if you have any accrued income, so you will write here on the debit side. And if the at the year start, if the income is prepaid, so you will write here. If in the closing year, in the closing date, if you have any prepaid income, so you will write it here on the debit side. And if you have any accrued income at the year end, so you will write it on the credit side. So why we need to write it on the required side. So you can go through one of my videos and the topic was accrual and prepayments. So if you don't understand, so first of all you need to cover this concept and after that you will be able to understand that why I'm saying that you can use the APPA and mnemonic. Okay, so as you can see, that we have accrued income at the start, and this is the start date, and this is the year end date, 2018 and 2019. Okay, so as you can see that we have the accrued income at the start, which is 800, so we will write it here. And we have some subscription paid in advance. It means a prepaid income. And this is the at year start, which is 1300. So we should write it here. And we have again a subscription in arrears at the year end, which is 1100. So we will write it here, the accrued income. So we have received 12,600 during the year. So we will make the entry association account credit because this is income account and bank would be debit. So 1300, and we know that income statement in income and expenditure account would come here because at the when we are going to close the subscription account at the end of the year, so we will be debit the subscription account and credit the income statement. Okay. So whatever the difference we will find, we will transfer it in the income and expenditure account here. So 1300, 12,600 plus 1100 minus 800. So you have 14,200. So D option is the right option. Okay. So question number 25. So now let's see this. A company's financial year ends on 31st March. On 31st March 2021, trade receivable was $45,000. On 31st March 2022, trade receivable were $4,100,000. So this is previous year's trade receivable and this is the current year's trade receivable. So an irrecoverable debt of $1,000 is yet to be written off at 31st March 2022. So provision for doubtful debt is to be maintained at 5%. What is the effect of the irrecoverable debt and adjustment to the provision for doubtful debts on the profit for the year end 31st March 2022? Okay. So to determine the effect of the irrecoverable debt and the adjustment to the provision for doubtful debts on the profit for the year ended 31st March 2022, let's go through. So first of all, in step 1, what we need to do is, first of all, we adjust the trade receivable for irrecoverable debt. So trade receivable at 31st March 2022 was $41,000. Okay. And irrecoverable debts is to be written off. Irrecoverable debts to be written off. Which is $1,000. So after writing off the irrecoverable debt, the adjusted trade receivable become 41,000 minus 1,000. So this is 40,000. So now we are going to calculate the provision for doubtful debts. So the provision for doubtful debt is to be maintained at 5% of the adjusted trade receivable. So provision for doubtful debt is equal to 40,000 and the 5%, 0.05 is equal to 2,000. So previous provision, we need to find out that what was the previous year's provision. So previous year provision 5% of 45,000 is equal to 45,000 multiply 0.05 is equal to 2250. So current year provision is 2,000, which we just find it out. Current year provision is equal to $2,000. So change in provision would be change in provision is equal to 2250 minus 2000. So this would equal to $250 decrease. So now we are going to calculate the total effect on profit. So ethical let decrease by decrease profit by 1000. We are going to see the total effect. Total effect on profit. So ethical let decrease profit by 1000. So and decrease in the provision for doubtful debt is increased by increases profit by 250. The decrease in the provision for doubtful debt increases the profit by $250. So the net effect on profit is equal to 1000 minus 250, and this would be equal to 750 degrees. Okay, so the correct answer would be a decrease in $750. So A option is the right option. Okay. So now let's see the other question. Okay. So which items would appear in the statement of changes in equity of X Limited for the year ended 30th June 2020? Okay. So first of all, we have the first information that interim dividend paid on 31st March 2020. So this would appear in the statement of changes in equity as it represents a distribution of earnings during the year. So that's why this would be the part. Okay, and the next one is proposed dividend for the year ended. Proposed dividend for the year ended 30th June 2020. So proposed dividend are not included in the statement of changes in equity until they are declared and paid. So therefore, this would not appear. Third one is proposed final dividend for the year ended 30 June 2019 paid on 31st October 2019. So since this dividend was declared and paid, it would appear in the statement of changes in equity for the year ended 30 June 2020. And the fourth one is transfer of general reserves on 30 June 2020. So the transfer to reserve are adjustments within equity and would appear in the statement of changes in equity. So it means that this is again the right option. So 1, 3, and 4. So A option is the right option. Okay, so question number 23, that T Limited was formed on 1st April 2019. A total of 220,000 shares was $2 each were issued, and shareholders were asked to pay 75% of the share value immediately and 25% on 1st April 2020. So by 1st June 2019, holders of 190,000 shares had paid the amount due. So what was the paid up capital on 1st June 2019? Okay. So to calculate the paid up capital on 1st June 2019, so let's go through the steps by steps. So what was the total shares issues? Total shares issued. And this is 2,000, 2,20,000. And par value of each share is $2. This is $2. And amount paid immediately, 75% of the share value. Amount paid immediately, which is 75% of the share value. So, first of all, let's calculate the value per share paid immediately. So, since each share is worth of $2, so 75% of this amount would be 2 multiply 0.75. So, this is equal to 1.50 per share. Okay. So, now we are going to calculate the number of shares paid up by 1st June 2019. So, by 1st June 2019, the holders of 1,000 shares has paid amount due, basically. So now we are going to see we are going to calculate the paid up capital. So paid up capital is equal to 190,000 multiply 1.50, because this is the a value of per share. So this is equal to 285,000 dollar. So A option is the right option. Okay. So now let's see the question number 22. So where is interest on drawings entered in the accounting records of the partnership business? Okay. So first of all, the partner's current account. Okay, so interest on drawing is credited to the partner's current account as it reduces the amount owed to the partners by the partnership. So um, let's 1 second. Okay, so where is the interest on drawing entered in the accounting records? Okay, so we know that interest on interest on drawings, we will credit in the appropriation account because it is reducing your appropriation account. And in partners capital account, we do not record interest on drawing, so there would be no entry. And in partners current account, we record interest on drawing, and we debit the interest on drawing. We debit the partners current account and we carry the interest on drawing. So that's why B option is the right option, basically. Which item is a current asset? So this is very easy. Um, the current asset. So work in progress. Work in progress is basically the current asset, because bank overdraft is a liability. Loan repayable in 12 months is a non-current liability. Prepaid income is a kind of current liability. So work in progress is the current assets. Unlimited liability is one of the disadvantages of operating as a sole trader. What is the correct explanation? Unlimited liability. So sole trader cannot take a bank loan. This is not the unlimited liability. A sole trader has to manage a business alone. A sole trader can use private funds to repay business loans, and sole trader may lose their both business and personal funds. Yes. So unlimited liability means that whenever the sole trader has to pay the loans, so if he hasn't enough profit or enough money in the business, so um he has to like lose its personal funds and the business profit also. Okay, so the next question is that Alex purchased. This is question number 19. Okay, so Alex purchased good costing $1,000. Okay, so now we are going to solve this question number 19. Okay, so Alex purchased goods costing $1,000. She planned to resell the goods at a markup of 25%. Okay, and these goods were unsold at the year end and were found to be damaged. Alex estimated that they could be sold for $600. Okay, so what does it mean? So now we have to see that what value should be shown for these goods in the year and financial statements. So its cost is $1,000. Okay, and its estimated resale value is $600. So the cost is $1,000 and the estimated resale value, this is equal to $600. So inventory is valued at the lower of cost or net realizable value. So here the realizable value is 600. So it means that B option is the right option. Okay. Question number 18. So Devendra prepared the following journal entry. Irrecoverable at 714 debit, and Tobias is 714 credit. So which statement is correct? Okay. So um Devendra has provided for a doubtful debt owed by Tobias. So here, as you can see, that it is the bad debts entry. It means that Tobias cannot pay the amount due to Devendra, so that's why Devendra made this entry. He made the entry, debit entry is irrecoverable debt, and the guarantee is Tobias. So it means that Tobias will not be able to pay the 714 to Devendra. So it means that C option is the right option. So as you can see that Tobias cannot pay the amount due to the Devendra. So it means that this is a bad debt entry. Okay. Question number 17. So why is it important? So why is it important to match cost and revenues? Okay. So basically, matching cost with revenues ensure that profits are accurately calculated for the same amount accounting period, allowing better year-to-year comparisons. So that every debit entry has a corresponding credit entry, so that the business does not incur any losses. So it's not like that. If even if your costs and revenues are matched, so still you will be incurring losses in your income statement. C option is that to enable a better comparison of a profit from year to year. So yes, this seems to be the right option. D is to ensure that the bank balance is accurate. So we are not matching cost and revenue just to accurate the bank balance. So it's not right. So basically matching costs with revenues, it ensures that profits are accurately calculated for the same accounting period. It will allow better year-to-year comparisons. So C option is the right option. Okay, so question number 16. A trader sold one of his vehicles. What is the general entity to remove the total depreciation in the on the vehicle sold? Okay, so this is now very easy. So when we sold the vehicle, so what type of journal entry we will make to remove the total depreciation? So basically, whenever we charge a depreciation in provision for depreciation account, so provision for depreciation account always credit whenever it is increasing, whenever we are charging depreciation. So if we want to remove the total depreciation, so it means that we will debit the provision account. And but we have to make the entry on the credit side also. So since we sold this asset, so it means that we will be preparing the disposal account. So in provision account, what will happen? Provision for depreciation. So we are preparing the entry here, but when we need to remove it, so we will be debit it because this asset has been sold. So we don't need to keep its depreciation in the provision account. So we will debit it, and in reference we will be using the name of disposal. So disposal will be credit and the provision for depreciation account would be debit. So D option seems to be the right option. Provision for acquisition of motor vehicle debit and disposal of motor vehicle would be credit. Okay. So the next question is that Elsewhere purchased a motor vehicle costing $8,000 on 1st January 2018. It is depreciated at 40% on the reducing balance basis. Okay. That it means the reducing balance method RBM. Which journal entry records the depreciation for the year ended 31st January 2019? First of all, we have to find out its depreciation. So, motor vehicle cost was 8,000. Depreciation rate is 40%. As you can see, this is 40%. And year is 2019. So now we have to find out, first of all, the depreciation for 2018. So at the start of the year, we will be applying 40% on $8,000. And this will give you the answer, which is 3,200. So it means that carrying amount at the start of year 2 will be so for year 2 will be 8,000 minus 3,200 is equal to 4,800. So this is the carrying amount. And now we are going to find out the depreciation for year 2 for 2019. So 4,800 multiply 40%, and this is equal to 1,920. So it means that for year 2 its depreciation is 1,920. So what would be the general entry? So we will debit the income statement, because we know that every year, because depreciation is supposed to charge in the income statement in the expense section, because a depreciation is a non-cash expense. So in income statement, depreciation will be debit. Income statement will be debit. Income statement will be debit by 1920, and provision for depreciation account will be carried. So it means that A option is the right option. Okay. So the next question is that the cost of repairs to machinery was debited to the machinery account. What was the effect of this error? Okay, so basically, the cost of repairs to machinery was debited to the machinery account. So it means that we overstate the assets, because the machinery account is our asset. So we overstate the asset. And what was the effect of this error? Okay, so we have to see that what was the effect of this error on the non-current assets account and on the profit for the year. So we know that or assets are overstated, so it means that A or B could be the right option. But now let's check the profit for the year. So we overstate the assets, okay, and we also overstate the profit. Why? Because we didn't record the repairs to machinery in the expenses section. If we didn't record this transaction in the repairs to machinery account. So it means that we mistakenly understate the expenses. So when we understate the expenses, so it means that because expenses are supposed to supposed to subtract um from the GP. Okay. But what happened, we didn't record it in the expenses. So it means that we lowered the expenses, we understate the expenses, so that's why our profit will be overstated. So it means that overstate is written in the C option and in the A option. So A option is the right option because here the non-current assets and the profit for the year is overstated. Now let's see the question number 13. Okay. Which item would not appear in the purchase ledger control account? Okay. So will not appear. So contra entry will be the part of purchase ledger, so it's not right. Discount received is also the part of this. Interest charged. So interest charge would also be the part of the purchase ledger control account. Return inwards. Yeah. So return inwards means sales return. So it will not be the part of purchase ledger. It will be the part of sale ledger control account. So D option is the right option. Okay. So now let's see question number 12. Business keeps a complete set of books of accounts. So what is not used as a source of information for making entries in the control accounts? Which is not used. Okay. So cash book we will use it for finding out the discounts. Um and journal. Okay. So basically journal we will be using for finding out the bad debts. And purchases journal, we will be using it to know the purchases. Sales ledger, okay. So we will not use a sales ledger to prepare the control accounts. Although like we use the sale, we will compare the balance of the sales ledger control account with the sales ledger, but we will not use the sales ledger as a source of information to make entries in the control accounts. So D option is the right option. Okay, so now let's see the question number 11. So now let's see the question number 11. So bank statement of a business showed a current balance of $280 on 31st December. So at that date, there were unpresented checks of $312 and a standing order of $20 had been incorrectly entered as a 22 on the bank statement. So what was the balance in the bank column of the cash book on 31st December 31st December? Okay. So bank statement balance was, so this is the bank statement balance. Bank statement balance is 280 carat. Okay, and unpresented checks were 312. And standing order error overstated by $2. As you can see, it is $20. It was actually $20, but it is incorrectly entered as a 22. So it means that there is an error of $2. So standing order error overstated by $2. Okay, so what would be its adjustment? So now we are going to add back the $2 error, which will be 280, which is the bank statement balance plus $2 because this was the error. So this is equal to 282 carat. And now we are going to subtract the unpresented checks. So 282 minus 312. So this is minus 30. It means a $30 credit answer in the bank column on the credit side. So A option is the right option. Okay, so what would result in the cash book balance being lower than the bank statement balance? Okay. So we have the options. So what would result in the cash book balance being lower than the bank statement balance? Okay. So the A is a check received from a customer was not recorded in the bank statement. Okay. So if you received a check from the customer, so you will record it in the bank cash book. So cash book balance will increase. But if you will not record it in the bank statement, so it means that bank statement balance will decrease. So here the cash book balance is not lower than the bank statement balance. So A option is not the right option. Let's see the B. So customer's check dishonored by the bank appeared only on the bank statement. Okay. So if it is only appeared on the bank statement and it is recorded in the back cash book also, because at first when we receive the check from the customer, so we will, of course, we recorded it in the cash book, but we did not record it when it got dishonored. So it means that if it will only record in the bank statement but not in the cash book, so the both balance cash book balance would not be lower than the bank statement balance. So B option not the right option. Um, okay, and let's see the C. Payment by a customer directly into the bank was not recorded in the cash book. Okay, so in this case, the cash book balance will be lower because we didn't record it in the cash book because this is a direct payment. It is directly transferred into our account in our bank. So bank will increase, but cash book will not increase. So C seems to be the right option, but let's see the D also. Payment of insurance by a standing order was not recorded in the cash book. Yeah. So if it is not recorded, okay, so payment of insurance by a standing order. So standing order means that the same amount is deducting from the cash book. So that's why here again the cash book balance is not lower than the bank statement balance. So D option is not the right option. So C seems to be the right option. Okay. So now let's see the question number 9. Trader took some goods from the business for his own use. Okay, so he did the drawing. He credited the purchase account with the cost price of goods $200 and carried the sales account with the selling price of $300. So which entries did he make the correct error? Which entry did he make the correct error? Okay. So in A option, he what he did, so he basically debited the drawings account by 200, so it is right. He basically debited the income statement. So there should not be any income statement written here because there is no link between the drawings and income statement. We should not debit the income statement. So suspense is on the credit side, which is 300. Now let's check the B answer. Okay, so in B, he debited the drawings account, which is okay. So what happened? A trader took some goods from the business for his own use, and he credited the purchase account with the cost price of $200 and credited the sale account with the selling by the $300. So he credited the selling account, he credited the sales account. So increase the sales account basically. So yeah, so we have to debit the sales account in order to rectify it, in order to decrease it. So it means that on the credit side, the total would be suspense account, which is $500. So this seems to be the right option. Okay. So here in C option, suspense is debited, but the drawing in the income statement is credited. So drawing should not be credited, it should be debit, and there's no link with the income statement. So that's why this is not the right option. And again in the D option, the entry is right, but side is not right because drawings and sales should be on the debit side because we have to decrease, we have to and we have to record the drawings and we have to decrease the sales. So in order to decrease the sales, we have to debit it. But here it is credited, so that's why D option is not the right option. So B seems to be the right option. Okay, so next question is the total of trial balance did not agree and $200 was debited to the suspense account. Okay. The bookkeeper then checked the books and found the following errors. So we have the first error. A sales invoice of 700 had been recorded in the sales journal as 770. Okay, so it means that your sales journal is overcasted by 70. It is overstated. It is overstated, and the sales journal had been totaled incorrectly. So, what error was made when the sales journal was totaled? Okay. So, as you can see, that the total of the trial balance did not agree with $200 and it was debited to the suspense account. So, what does it mean? It means that your credit side is heavier than your debit side with $200. So, it means that the sales journal was maybe totaled by two, its total was wrong and it is overcasted by 200. That's why there's a difference of $200 on the debit side. So, it means that B option seems to be the right option. Okay, so now let's see the question number 7. A bookkeeper made two errors which cancelled each other out. So which type of error did he make? So basically this seems to be the compensating error because it involves two independent errors that have offsets each other. So A option is the right option. Now let's see the question number 6. Okay, so what is the double entry for recording a check payment to a carrot supplier? So bank will be carrot and the supplier will be carrot. So let's see. Bank will be debit in A and B option. So since he is your supplier, okay. Sorry, it is not debit. I'm mistaken. So you have paid the amount, so bank will be carried. And since he is your supplier, so it means that it should record in the purchase ledger control account. So your purchase ledger control account will be debit. So C option is the right option. Okay, so now let's see the question number 5. Which documents are used as a source of information to make entries in the cash book? Okay. So option A is which business documents are used as a sources of information to make entries in the cash book? Okay. Bank statement, check counterfoil, invoice, and paying in slip. So bank statement and only basically bank statement and check counterfoil and paying in slip and receipt and invoice. Receipt will be used in the cash book entries, not the invoices, basically. Because invoice, we will give the invoice to our customer when we will sell something to them. So invoice will not use as the documents. So it means that your C option seems to be the right option, because here, as you can see, bank statement, check counterfoil, paying and slip, and receipt is written here. Receipt we will be using whenever there is a cash sale will happen. So C option seems to be the right option. Now let's see the next question, which is question number 4. Okay. So Alex issued credit notes in August and entered them in the correct book of prime entry. Okay. So how was the total of this book of prime entry recorded in the nominal ledger at the end of the August? Okay, so Alex issued credit notes in August. So it means what happened, because if someone is issuing the credit notes, so it means that he received some sales return. So in that case, what happened in the August? So basically, we have to debit the sales return account, because credit notes will only issue in that case whenever we are receiving something which maybe we sold in past, and after some days, if we received our material back to us, so it means that we will be issuing the credit notes. So we have to debit the sale return account. So D option is the right option. And let's see the question number 3. Okay. So Jamil's financial year ends on 31st December. On 1st January 2011, 2021, he brought down a debit balance on his stationery account. What does this balance represents? So debit balance in the stationery account represents the value of stationery. It means the inventory on hand at the start of the period. So at the start of the period was by 1st January 2021. So it means that D option seems to be the right option. Now let's see the question number 2. Balances remaining on the books of a business after the preparation of the income statement included the following. So we have to see the total liabilities. Okay. So loan from XYY Finance, this is $10,000. Wages due is also the part of liability. Trade payables also the part of liability. Okay, so 4650. Just give me some time so I can just calculate it. So this is 10,000 plus 620 plus 4650. Okay, so this is 15,270. So C option is the right option. Now let's see the question number 1. So how does a trader use the information provided by the financial statements? Okay. So basically, the primary purpose of financial statement is to evaluate performance over time, such as comparing the profits or other metrics across years. Okay. So the A option is to calculate the amount of cash withdrawals taken. So it's not like that. We prepare the financial statements not only for the cash drawings taken, to calculate the amount that is, and even though cash will not record in the financial statements, to calculate the amount that is, if to calculate the amount that is owed by trade receivables. So of course, we will not, financial statement is not only providing the information related to the amount which our trade receivable owed us. It's not like that. C, to check the balance shown on the bank statement. So again, financial statement is not only given the information about the bank statements. If we need it, we can even see the cash book to compare the business performance over a number of years. Yes, we financial statement is giving us the information related to the performance of the business over the years, and we can compare the multiple years of financial statement to see that where we stand. So D option is the right option. So here we have completed the whole paper, and we will meet in the next paper. I will be uploading some more accounting paper related to A levels and AS levels. And inshallah, in January, you will be getting your results, I guess, for October, November 2024 session. And after that, we will be working on the new paper, like October, November 2024. Goodbye.